Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to be talking about the SNB, the ECB. We've also got a trade right now going in gold that looks pretty good. We've got a Tesla breakout that's absolutely fantastic, up around 4.25. Really a huge break, and I'm going to show you exactly how that triple moving average crossover predicted that on the daily time frame. Then we're also going to take a look at the Euro USD. We're going to do a little bit of high-impact scalping, I think. It's active enough. We're looking at a 1-minute chart right now on the Euro USD for this time of day. That's sort of unheard of, but we've had some decent action, some decent volatility there. That comes after the ECB. We've also got a trade idea that sort of, we missed it. We missed our entry on U.S. oil. I'm going to go ahead and recap that, and I'm going to sort of show you what I was thinking, but realistically, we missed our entry, and it's a darn shame. We should have been more aggressive there, but that's life, and going into Friday, it's been an active week. It's been an active week. So Team Marina, good to see you. Good afternoon, everybody. Mark Corp, good to see you. Great trade on the silver this morning. Silver's been interesting, hasn't it? Metals have been interesting. Metals on a great big pullback after what was a legitimate bullish day. Silver off, almost 2.67%. Let's get out to gold. This was an interesting trade right here that I just placed it. I got a couple things we need to run through though. This is fascinating stuff, and this is what I'm looking for. You guys ask, Shane, what are you looking for from a trade? This is some of the stuff I'm looking for. Number one, my Fibonacci's came into play beautifully. Number two, we have an overall bull market here in gold. There's no question about that. Now we're starting to get a bit of a retracement and an opportunity to buy. And number three is something called confirmation. Now, full disclosure, I bought this after the washout. These are demo dollars, but we got our confirmation back up above 38%. And I'm going to show you exactly why I bought the market and why we may have seen the worst of the pullback. So good to see you, Bobby Bob. Welcome. Okay, let's get on with the program here. Daily chart, spike low to a spike high there. There's your pullback beneath 38%, which is right up at 26.85, 26.8350. We washed that out down to about 75. So if you took this bid right up in front of the initial approach, it was dicey. It was dicey, but this is sort of a concept that I've been working on for a long time, and it's one of the things that I like to do on real short time frames. These are going to be a little bit bigger, but it's called confirmation. And essentially, what confirmation is when we get the proper behavior right around maybe one of my key support zones, my anchor zones. It's sort of a signal maybe to take this trade. So this is a good look at a 4-hour chart, a 4-hour gold chart. And what do you have setting up right here? We've got about 57 minutes left in the bar. I don't know where this thing's going to close. I would be surprised if we rotated back down beneath our 38%, but we certainly could. This could potentially be a hammer signal. Now, a hammer signal is a sign of pending market reversal. So you have a situation here where we've got a big key number, 26.83, daily 38% retracement. We had really the epic sell-off right there that came during the U.S. overnight, and then we're starting to get that bounce. And if that hammer does set up, that's a pretty darn good accumulation long. That would be a situation where you would just buy in on that hammer's close, something like this, depending on where it closed. Stop loss is beneath the hammer, and then you're shooting really to return up to that order block. It's that simple. This is a pretty good trade idea. We're not quite there yet, about 57 minutes from now, but I would be very surprised if that hammer formation, that's what a hammer is right there. Nice elongated lower tail, a rally up top, and then you get sort of a close of the body with a little bit of red. A lot of people like green hammers. I really don't care as long as I get that elongated wick. That tells us the bidder stepped up, they protected the market, and they dominated what once was a bearish market. So a lot going on right there in the gold market. Let's just go ahead and let this one twist. The long was right there from 38%, waited for the washout. Now we're getting the bounce. Let's take this down to a shorter time frame and see exactly what happened on that first approach to our 38% level. It wasn't bad. Boy, I always do that with my highlighter. It wasn't bad, all right? You came down. You took a look at this entry right here. Your low went right to 83.36, which is essentially the level, and your bounce is right up there to 86.77. So in and of itself, that's a $3 scalp right there. Bam, got it. Initially, you took no draw. Then what did we have? I talk a lot about hammers. There's your hammer. 5-minute hammer. What happened from there? Compression break. What's that break right there? The high is up there to 88. That's about a $5 move. Compliments to the chef. That's absolutely good stuff. That's what I'm looking for. So right now, we're looking for more of a position setup. If this position setup does come to pass, which I think it will, we're gonna get a shot at this hammer. If in fact we do get this hammer, I would love it to be a green hammer. But if not, if it's just a little red hammer formation, that's great. That really will be our signal to bid this market, and we're gonna bid it in conjunction with sort of our long-term level, our daily support zone, and then you're gonna have a clear-cut stop loss just be sure to dial in your leverage. Remember, 1 to 3% on any given trade. You don't want to lose the ranch. All right, I will apologize right off the bat here. We've got some background noise. We've got some folks that are repairing the basement. We had an unfortunate flood a couple months back, so we got the contractors in there today. So if you hear power tools, or maybe some talking down there, or some hammers pounding, that's going to be them. So I'm going to do my best to stay on task and not get distracted. But hey, if you do hear that background noise, my apologies. All right, let's get right out to a trade idea. This was one that I put out earlier today. And you know what? It just isn't as sophisticated as I thought it was. I should have been more aggressive with this. I don't spend much time regretting anything, but this was one that we should have got. The trade idea was easy. The idea was very simply, we knew we had a pullback today in crude oil. I wasn't buying it, but I didn't believe it. I thought that the pullback was sort of artificial, and it was sort of on the back of what we saw happen in the PPI number. PPI came in hot. That's going to be our fundamental of the day today. We're going to cover that PPI number came in big. That suggested that potentially a stronger dollar down the line, that would be theoretically a bearish market driver for crude oil. So I was looking for maybe us to get a deeper pullback down there to about 68.50. We were almost there at one point. We were right around 69, just north of 69, but then we bounced from there. So I was hoping that we'd get our washout down there to 62% so we could step up and take our position and bid that thing from 68.55. It's still on the board. It's still a valid trade. I just think we're going to go wash this top out, and we're not going to get a chance to buy that specific pullback. If, in fact, we do move higher today or maybe earlier tomorrow, just adjust your Fibonacci's and look to bid the retracement zones. You want to be on the long side of crude oil right now. Why? Listen, I've got a million bearish market drivers out there, but one thing that we do have is we do have a situation where, hey, we've got problems. Well, we have political unrest, and we have geopolitical unrest. We have a lot of things going on that sort of point towards war escalation. We're going to talk a little bit of conspiracy theories today. I don't want anybody to get weirded out by what I'm going to talk about. I'm not questioning anybody's faith or their religions or anything. I'm not questioning your scientific bent either. I'm not questioning anything. What I am pointing out is that we've got things going on in our news cycle that just reek to high heaven of either high-grade espionage or potentially some sort of a mass psychological operation on the public. So I'm going to talk about that, and then the geopolitical unrest. Remember, why would crude oil be moving higher? Why? Syria's fallen. Assad's out in Syria. A lot of oil comes out of Syria strategically in a very, very important region of fossil fuels, and that's why you've seen a big bullish week. I mean, there's no joke. We didn't topple it, but Assad was toppled on Sunday, and you see right there's your big rally, and now you're up significantly, about $3.50 from where we were. So Trump pretty much means lower oil prices. You're also going to see maybe higher interest rates are going to mean lower prices. You're also going to see winter seasonality at some point kick in. But right now we're running supply deficits. I put some stuff out on X yesterday. We're running about 6% beneath the 5-year average for U.S. crude oil supplies. That's bullish. Couple that with Syria, a regime change in Syria, and the folks that took over Syria, questionable. A lot of problems there. There's a lot of problems on the horizon that could potentially disrupt the fossil fuel circulation throughout the globe. So for right now, I've switched from being bearish to sort of bullish, meaning I'm just trading my technicals. I'm not going to worry too much about the fundamentals. I think they all cancel out in a lot of ways, but my technicals are pretty good. These ranges are huge. Our bid was down here at 55. We're not going to get it. Right there, 69, 28, 38% was beautiful. You took what'd you take there? About a 12-tick draw, and then since then we've rallied more than $1. So that was where the bidders were. There's still bidders in this market. So if in fact we top out maybe somewhere up in here during the U.S. overnight, and then we get that pullback, I would definitely be looking to bid 38s and bid 62s if you're lucky. But for right now, that trade idea is still technically valid, even though I don't care much for it anymore. Sort of made a mistake there. We should have just bought at market, something similar to what we did with gold. Let me see. Emmanuel, good to see you. I'm actively watching from Nigeria. Great. It's good to see you. Welcome one, welcome all. You guys feel free to ask any questions you like. I'll do my best to get to all of them. We are jam-packed today, though. We've got a lot of markets to cover. We've also got some key fundamentals and a lot of technical analysis that we also need to look at. Tesla, I do want to cover this Tesla breakout. Now, if you've been watching any of our live streams, and if you've seen our YouTube video on the 5-8-13 strategy, go check it out. The triple moving average strategy, check that video out as well. And this strategy is very simple. Now, I've been working a little bit with some AI intelligence, some AI backtesting intelligence, Capitalize AI, and I've run some rudimentary backtesting things. And I'm probably going to do a tutorial at some point by the end of the year. Well, maybe not by the end of the year, but maybe early next year on how to use some of this software and do your own back-tested studies. Now, what I've found so far is that I've run just a couple real basic crossovers with no filters. And my stop losses and profit targets are sort of ambiguous. So we're not really showing anything that's bringing back a huge return. Now, I'm going to tell you all about why using this software is trouble. I'm going to point out all the pitfalls and things probably in a video early next year. But from what I can tell you is that when we step back to a daily time frame on something like stocks, and you have a situation where the fundamentals support a technical indicator, this is why I'm a hybrid trader, the fundamentals right there, this gap higher by Tesla on election day after Trump and the Republicans swept the U.S. presidency and Congress. You saw a major move higher in Tesla. Why? Because Elon Musk was a big part of that. Basically what they're saying, you're going to get less regulation. Musk's going to be able to operate and expand his market share. That is why Tesla rallied the way that it did. It was purely political. Now, if you do want to see exactly, well, I mean, this was your crossover back there, but right here was election day, and that was your second gap up. But this crossover came in late October. Now, you'll notice this strategy is very simple. The 5 EMA crosses over the 8 EMA. And as soon as price is above all 3 EMAs, the 5, the 8, and the 13, then you buy the market. Your bid would have been right up there at about 260.87. You've got a couple options now. You can get out of the market on a subsequent crossover and just try to get in on a big trend and take the money off the board, or you can go with a fixed risk versus reward type of a strategy. Now, one of the great things about this strategy is the execution is easy peasy. Your stop loss is going to be beneath this swing low. Pretty good little tight order block right around 200 to 225. You've got a really nice stop out location there. Crossover, your bid's going to be somewhere up around 60, 2060. Now, the first thing that pretty much everybody's going to say, and you're right for questioning it, well, didn't it cross back over right there? No, it didn't. No, it didn't. You've got to be very, very careful with these crossovers. That's a close but no cigar, and you're still in that trade. Now, the big thing that I would point out is it needs to be obvious. These crossovers need to be obvious. If they're close or if there's any question at all, you don't take the trade. You absolutely don't take the trade. But this Tesla trade's a fantastic example of why a lot of investors use strategies like this. It gets them into the market and it keeps them there. And you're trading 421 today. You've pretty much doubled your money in just over a month, 6 weeks. That's insanity. That's insane. That's an insane payoff. That strategy could have got you into it. It really could have. So that's fascinating stuff. I love that, especially on a daily. I love the daily chart for stocks. To me, I don't know that going any deeper into the intraday stuff is really worth it, but a lot of folks do. They make a lot of money. I'm not an intraday stock trader. I'll say that right off the bat. I trade futures, Forex, and some crypto. So definitely a lot going on there. Let me see right here. Emmanuel, I'm sorry, I can't pronounce your first name. Arue. I'm just going to call you Emmanuel. Why is it that when one is trading lesser time frames, the rate in which he earns differs? Is there a better explanation? Take the 5 minutes compared to the 1 hour. Very simple, Emmanuel. The smaller time frame you go on the charts, the choppier price action gets. We go down to a 1 minute chart, the price bars are going to be a lot smaller than they are on a daily chart. Those ranges, those smaller ranges, typically mean that there's a lot of chop in the market. Anytime I look at the market, depending on a 1 minute time frame, and it's not an extremely active market with big ranges, it's going to be choppy. You're not going to make as much money there. You can take more trades and you can try to establish consistency over time, but realistically, the trades that you'll take are going to be a lot cheaper, but they're not necessarily going to be as lucrative. So I like longer time frames, but I understand that on shorter time frames, you got to trade that to make these trades affordable. I like the 30-minute for pretty much all of my futures contracts, the 30 and the 5 minute, and then also the dailies are fantastic, and the 4 hours for Forex. Those are my premium trade entry points. Okay, so that's a good look at Tesla. That's a great trade. As far as Euro USD, I wanted to get some action here during the live stream, and of course, it just never seems to work out for us during this time of day. But you can see right here, I'm going to point out the trade 1 minute Euro USD. Now, why on earth would I be trading a 1 minute Euro USD chart right now today? A lot going on. PPI was a big figure for the United States dollar. The ECB cutting interest rates was a big deal for the Euro US dollar. So you've got a big daily range. You've got a lot of action. Price isn't really doing anything directionally, but it's a big, big daily range. That means there's a lot of volatility and a chance really to trade. So right here on a 1 minute chart, I was looking at this trade. I really wanted to execute this before we came on, but you'll see right there, you're above 70 on that relative strength index. Above 70 is the sell, all right? Below 30 is a buy. This is a 920 EMA. Our trigger, what gets us into the market, is the 9 EMA crossing the 20. The video's coming out tomorrow, so mark your calendars. YouTube, I've already got it all scheduled in. It's going to be dropping tomorrow. So check that out on our YouTube channel, on our How to Trade YouTube channel. It will teach you how to trade the 920 conventionally, just the regular setup of a 920, and then also with RSI confirmation, which is what we're doing right now. So if you don't know what I'm talking about, watch the video tomorrow. You'll know exactly what I'm talking about. In any case, we're in overbought territory right there. That means we're looking for a sell signal. The sell signal is what? It's the 9 EMA crossing beneath the 20, and it does it right there. So right back at 10:19, about an hour ago, you could see that was your sell signal. Beautiful entry. It really was a beautiful entry. Let's go back to my highlighter. That would have been your entry right there. Bang. Probably right in here would have been your entry. That would have been your sell entry. Stop loss is right up above that previous swing high, and then you're just looking to let it roll. You can either let it roll to the next crossover, or you could put a fixed risk versus reward in. Your sell entry probably would have been right around 105.08, and now we're trading about 104.92-ish. So what that's about 16 pips. That's a pretty good payoff. What's your top there? Your top there is about 105.17. So you'd have been risking about 10 pips, and you'd still be in this almost at a 1-to-2 payoff. That's a pretty doggone good trade. What's our spread right here? 1.7 pips. Not bad. You overcame the spread. You did a pretty good job. If you could figure out ways to trade this strategy with a 1-to-2 payoff, throw the spread out. So let's say, just a shade under 1-to-2, and let's say you can hit these trades 55 or 60% of the time. Ooh. Then you start to, then now you're cooking with gas. Now you've got a big time strategy. So check this video out. It's tomorrow. Last thing we got to look at, we got to be absolutely sure how we're managing these trades. Does the 9 cross back over the 20? No, it doesn't. If you're going to trade a 1 minute chart using these strategies, it's going to get very tight like that sometimes. Be careful. Be careful. Always be sure of what you're doing. If there's any question at all about a crossover or an entry point or an exit point, don't do it. Don't do it. All right, let me see you. Clive, looking out for the 920. Absolutely, Clive. Check it out tomorrow. Leave comments, too. Watch the video. Leave comments. If you have any questions at all, ask them here or ask them on the thread. If you ask them in the YouTube thread, I'll be sure to get back to you as well. Thanks for the response. Absolutely, Emmanuel. The cross EMA 813 to 21 for all time frames. Yeah, the triple time frame, the triple stuff, you can work this on any time frame. But here's what you have to understand, and here's your keys to success with any sort of crossover strategy. And I stress this in the video tomorrow. 3 keys to your success using crossovers and moving averages. Number 1, you got to know what to trade. Number 2, you got to know when to trade. And number 3, you got to know which duration. If you don't know what else to do and you're a Forex trader, focus on a Forex major, maybe the Euro USD, maybe the dollar yen. That's a pretty good one as well. Put your indicators on the dollar yen. If you want to trade it on a 24-hour basis, use a 4-hour chart. If you want to trade it and scalp it on a 5-minute or a 1-minute like we just did right there, focus on that London to New York overlap. London to New York overlap. Figure it out. Figure out exactly when those 3 or 4 hours are. That's when everybody's in the market. Focus on scalping during that time. Your spreads are going to be tighter, and you're going to have a better opportunity to capitalize on the momentum and the liquidity. That's about as clear-cut as I can make it. Now, if you want to talk about trading futures, why, futures are my game. I got all sorts of tips and tricks for futures, but most of you are Forex and CFD traders. You got to know when to trade and what to trade. You definitely, today's a great trade. It was a great day to trade the Euro USD. Why? Because it was active. It was absolutely active. So if you need a place to trade, go ahead and cruise on over to Switch. I got a question yesterday. Said, Shane, there's a couple YouTube videos that are really down on Switch. I go, hey, listen, there's always going to be people out there that are against brokers or they critique brokers. I have critiqued my brokers. I do it privately. I don't do it publicly for a lot of different reasons. I don't want to get sued for defamation or anything, but I will tell you this. I have had my broker on the phone, and I have gotten into him pretty big. I said, what happened with your spreads right there? What the heck happened? No, wait a minute now. My orders are rejected. Why were my orders rejected? Why isn't your order entry platform working? I've had all these conversations, guys. It is normal. It's a normal part of doing business. What's important is that you get paid. When you go to get your money out, you get your money in a timely fashion. And also, spreads are competitive across the board, but also you want to see the latency. You want to see your data feeds are fast. You want to make sure your spreads are as good as possible and that slippage is a non-factor. If you can get those things out of your broker, then you got a pretty good out. And also remember, anything you see on YouTube, research who's telling you what it is, especially if it's critical of something. Always make sure that you research. Go on over to Trustpilot, check out Switch Markets reviews. You'll see a lot of really good ones, about a 4.6 rating on Trustpilot. Full disclosure, I'm in the United States. Switch does not service U.S. clients, so I am not a client of Switch because they don't service my municipality. If you need a brokerage here in the United States for the Forex, check out Oanda. Let me see. Please analysis with the Great Britain pound, Australian dollar, absolutely gaming. I'll be sure to do that. T Marina futures are among the highest in risk, aren't they? Absolutely. But I always go back to that. I don't know if you guys ever saw the movie Lord of War, where Nicolas Cage was selling guns to the guy in an apartment, and he made a big stack of money by selling a couple of handguns. I sort of think I don't think about being an arms dealer. I always think about the quote in the movie was, I spent my entire life running from danger, and I should have been running towards it. Most people spend their entire life running from volatility and risk, and I found that if you run towards it, you can learn to manage it and do very well. To be honest with you, T. Marine, futures trading is fast. It's furious. Of course, there's risk. There's all sorts of big-time moves that can empty your bank account fast. One of the things that I like to do is capitalize on the volatility. So as long as it's moving, that's what I used to say on these streams. As long as it's moving, I can trade it. If it has a pulse, we can kill it. That's the way I look at it. So I love futures because they are volatile and they are risky. That's exactly right. Based on a true story, yeah, Team Marina. Lord of War is based on a true story, as are these streams. Let me see. Ian, hi, Shane. Can you take a look at gold? Yeah, I'll go ahead and recap gold. We just showed you a live trade going on gold to start out the stream. But we'll also cover the Great Britain pound, Australian dollar, and gold next. I want to cover some of this other stuff, though, because it's pretty important. Right here today, the SNB and the ECB, that was the name of the game. Those were our big-time economic events, those interest rate decisions. And here you go. The SNB decided to cut interest rates. They cut interest rates by a half. The SNB, they're gangsters. They're rogue. I mean, those are the cowboys. Those are the cowboys of the banking industry. The Swiss National Bank does what they want when they want. And if you watch some of those old streams, nobody will. I mean, they were from months and months ago. But I basically sat there and I said, listen, the Swiss National Bank wants their interest rates to be negative. They don't want them to be positive. They want them to be negative. It has to cost you money to put money in Switzerland. Believe it. That's the way that this world's worked. This banking industry has worked for a long, long time. So the fact that they had to go to a positive deposit rate in Switzerland really changed the game because, essentially they had to raise money. There was a liquidity crunch coming out of COVID. So there was a lot going on there. And now you're starting to see the Swiss National Bank is going to rush back down into negative interest rate territory pretty much as soon as they can. So keep a close eye on this. Look for big-time rate cuts out of the SNB. Right here, the ECB was the other one, and they also came off. They came off only a quarter point. We saw positive inflation data out of the EU, and what that meant, what that meant was you're going to get maybe a little bit more aggressive rate cuts. Remember, the United States, we're expecting a rate cut next Wednesday, and that's it for a while. This right here was fairly aggressive. Jobless claims numbers out of the United States came in at 242,000. That was above the previous release of 225 and above what was expected. I will make a prediction right now. The first U.S. NFP release of the year next year, I believe we're going to see major downward revisions to what we saw this month for November. I really believe that. I think you're going to see a major downward revision. I think it could be to the tune of 50 or 70,000. I really think so. You can see right here, initial jobless claims continue to rise here in the United States, suggesting that economic conditions are weakening. Right here, though, you did see a downtick in interest rates for those bond yields, 4.25%. Still healthy, though. Still healthy for 4 and 8 week T-bills. And then right here, pretty much our fundamental of the day is going to be a PPI. So let's go ahead and take a look at this Euro USD real quick. Then I'll get into PPI. This was a trade idea that I put out yesterday. Now, it has moved a little bit. We had a spike low down there move at about 104.62. That area is interesting because we've pulled back up to about 104.94. Keep a close eye on 105 even. Now, you can see we had the pullback exactly to 38%, 105.25. Really a fantastic trade for about 28 pips. Keep an eye on this area right up here. Now, don't get confused by all my horizontal lines. This set of lines, are my weekly Fibonacci retracements on that current weekly wave, and these are my dailies. Now, I used to do a lot of this on Livestream, and I would just confuse everybody. Nobody knew what the heck I was talking about. This is the essence of fractal geometry. Hey, Arshad, how you doing? This is the essence of fractal geometry. And what the fractals are is the larger sum is made up of smaller pieces that resemble the larger sum. So theoretically, if I'm looking at a weekly chart and I dial down the granularity to say a daily or a 30-minute chart, the price action may look a little bit different, but it'll contribute to the whole in the same fashion. Meaning, sometimes my horizontal lines, my horizontal support and resistance levels line up. And this is exactly what we have going in the Euro USD. We have sort of a real tight daily range. This is a very, very tight wave right here, but this is pretty good stuff. I would definitely say that your pullback zone from this high, this is your 100 zone, to your 0 zone, your pullback 38%, great sell today. This area right in here is what we want to target though. 105.46 up there to 105.66. I believe that our entries were somewhere right around 50, 55, something like that. This selling zone is still incredibly valid. If we do get a bump up into that area, I would look to be shorting that in a big, big way for the Euro USD. So that's absolutely huge, absolutely huge. All right, we did have a question here, and I'll cover this before we get into our CPI conversation as well. Great Britain pound, Australian dollar. Okay, this is pretty good stuff. Thank you for pointing this one out. Gaming, PUBG gaming. This one right here, interesting. And the reason why is, okay, we've got this big pullback. That was sort of an inverted hammer. Remember, I was going on and on and on about hammers to start up with gold right there. There's your pullback. Let's dial this back to a weekly and see exactly if we can dial something up that looks a little bit attractive here. Okay, I already like it. I love the market structure. Sort of have a weekly double bottom right here. I believe. Which one of these is the spike low? Let's see. That's 192.31.29. So that right there would be it. You've got an opportunity to draw some Fibonacci's from that low to this week's high. Okay, your key levels as of right now, 197.70. It's pretty good stuff if in fact you get a chance. But we're quite a bit above that. If you get a deeper pullback, those are sort of your long-term anchor points. I love that buy down there, 13-week EMA down at 195.70, 195.62. That's fantastic. The problem is we're a ways off of that. So let's go ahead and see exactly what we can do trade-wise right now. Let's go down to our daily. $197.70, and we're at 199.07, about 130 pips off the lead. Definitely have that one on your radar, though. I mean, that's pretty much a premium buy. Look at what you've got right there. That's your weekly pullback, right? That's your weekly 38%, and then you've got a 13-week EMA right there coming right into play. A 13-day EMA coming in right there. That's a great zone to buy. I'd be looking at 197.75s. That's a pretty darn good trade. Let's take a look at one more thing, and then we'll sort of move on here. The low, 197.66.63. So that spike low right there. And by spike, I just mean swing low, lower extreme. Some call that a demand zone. Some call it, a bid where the bidders are. You see right there, I mean, 198.38. You could buy 78%. Inverted hammer, I would wait. I think that daily range is too tight. I don't really like this market structure. A lot of overlap there. I would be waiting. And if you get that shot right there, you can sort of cash in on that market structure right in that zone. 197, 197.75, somewhere in there. So I hope that helps gaming. I think that's going to be a really fascinating thing. We can go to a 4-hour if you want. Our 4-hour chart's going to tell us to sell. I would rather just be patient. Look at this. This is lining up perfect. This is a great pair. Thanks for asking this. See, that's why I like you guys to ask questions about pairs that you're trading. I don't typically look at the pound Aussie. I really don't. But something like this. Look at your 4-hour chart. 4-hour chart does what? Had a nice breakout here, little pullback, and now we're moving sideways. So if we're moving sideways, what are our Bollinger Bands going to look like? Flat. They're parallel. We're in a rotational market. That makes me love that buy even more. Good stuff. That's confirmation on a bunch of different time frames. That would be my level. There's a lot of action down there at 197.50 for sure. Just a quick recap on gold, then we'll get to our PPI. This was the game plan. Don't understand any of that. Few do. The big thing I would say is here's your 4-hour chart. I would be very, very cognizant of this hammer formation. You got a big sell-off that came during the overnight, and then right there, what do you have? You sort of got a little bit of a reversion. That hammer setting up beautifully for us. Got about another 30 minutes. If that hammer sets up, that's your buy. Now, you'll notice that we're already rocking a buy here, and one of the reasons why is I got my daily here. what do you have? You got really great market structure, something right around a nice 4-day run up. And then today was sort of your big pullback, and all that's fine and dandy, but something like that. That was our key level we were looking at. I put a bid in. Price washed out down to 75, and then we bid right on the other side of this 38%. It's still a pretty good long. I don't have a problem with it. We did put out some other analysis there. Your high, that demand zone, that supply zone. I get those mixed up every time. That supply zone really suggests that you've got sellers there. Sellers right up around that 27.25 zone, and that's exactly what you had, 27.26, and then we got the big sell-off. I would play this to the long and just look for price to sort of rotate back up towards 2,700. I really don't see any reason why that won't happen. I'm expecting a quiet Friday, but remember, geopolitics, wars, bombings, war escalation, really all that stuff is going to send a lot of bidders to gold. A lot of bidders to gold. So I hope that helps a little bit there. Daniel 5, how is the Euro USD in the long term? Yeah, we just covered the Euro USD, Daniel. Go back, watch the live stream. I got dug in deep to the Euro USD. Long term, I think that you're going to see a situation where the Euro USD has a real chance to fall to par value in 2025, and that's because I believe the Fed's not going to cut rates the way that they said they were going to cut interest rates. That would be my long-term prognosis, but I put a bunch of trade ideas out for the Euro USD about 3 minutes ago. All right, we got a lot to cover here. All right, let's get going. How does PPI impact the Forex? This is going to be our fundamental of the day, and then we're going to go ahead and we're going to take a look at a few other markets. We're going to look at the U.S. indices to go ahead and close up what's been an interesting session. A heck of a lot of chop right now, and it does look like the markets are sort of breaking a little bit to the bearish side of things. But we'll definitely be looking at your U.S. 30. We're going to look at E-mini S&P 500 as well. We definitely want to do that, but this should be interesting. All right, PPI. What is PPI? PPI basically is what it is it's essentially a reading of inflation from the producer's perspective, and I'll explain that in a second. PPI impacts the Forex. If it's low, it's going to be bearish. It's just like CPI. If it's low, it's going to be bearish for the USD, and if it's high, it's going to be bullish. Today, we got an ultra hot reading. This is a good look at the actual what it is. The producer price index measures the average change over time in the selling prices received by domestic producers for their output. Okay, so that's the prices received. A lot of people call it prices paid. A lot of things are baked into this, particularly commodity prices. Sometimes the consumers can run from prices. Producers can't. It's all baked into the cake. It's all baked into the prices that they offer to the public. I see PPI as being a more accurate measure of inflation. That's just my own personal opinion. Came in very hot today. It came in very hot. Yet core PPI just shattered expectations on the yearly. You'll notice the core right here came in as expected, which was down a little bit from the previous. But take a look at PPI, just regular PPI, 0.4%. That almost doubled expectations. It's up from an upwardly revised previous release, and it's also came in at 3.0%, way up from 2.6 previous on the yearly basis. This was a big hot reading, and if you do take a look at your charts, that is the 45 that everybody's scared of. The prices just don't seem to want to slow down. That's your raw US PPI data right there, and this is your all-timer really going back to 2010. What happened in 2020? COVID. Prices exploded, and they haven't stopped. Even though yesterday's CPI number was sort of, I would say, encouraging, this is bad news. I mean, this was really bad news. You're absolutely right, gaming. Let me see. Shane, gold target long-term $3,000. Yeah, Arun, absolutely. I see $3,000 for gold. I could even see it later this year. I really could. All right, let's take a look at a couple of U.S. indices, and then we're going to take a look at a few news items that are going to have potentially the crypto world. A lot of people going into crypto right now. In any case, weekly chart, what do we got? E-mini S&P 500. Easy read for me. Spike low there. We go to last week's high. Pullback zones right there at 6,013.50. That's a no-brainer. That's easy. Let's go to an intraday type of a scenario. Look at this. This is garbage. This is garbage. I mean, I won't tell you what I really would say, but I would take a look at this chart and I would say this is absolute trash garbage. Why do I say that? Because nothing's happening. It's just all it's doing is wiping out longs, wiping out shorts, doing absolutely nothing. This is not a trend day on the 30-minute time frame. I highly recommend focusing on the 30-minute time frame during that U.S. session, especially if you're trading the E-mini S&P 500. Always know what that signature is. So right here, what do you have? There's your PPI number, okay? We traded inside a PPI. There's what? There's your opening bell, ding, ding. Then we washed out all the retail longs, got stopped out there. And then what happened? We rotated up and knocked out all the shorts. Two could play at this game. We have just the strategy for this. It's called the Pendulum Strategy. Now, the Pendulum is going to be in our trading academy at howtotrade.com. Go ahead, sign up, check it out. Watch the video. It's about 6 minutes long. I do a lot of live streams on trading the Pendulum. Pendulum is absolutely fantastic for flat markets, and it doesn't get much flatter than this. What is the Pendulum? I'm going to give you the quick and dirty right here. What you're looking for is you're looking for a test of support and a 10% bounce. Then you're going to buy the market. Your profit target number 1 is right there, 50%. Profit target 2 is at 90%. I'm going to focus on 50. Our stop loss is going to be where? About 8 points. The difference, it's a 1-to-1 ratio between our entry point and our midpoint. That's about 8. So we're going to be I'm just eyeballing this. Stop loss is going to be at 61. In order for this to be valid, we have to go down. We have to check this out within a few ticks. I'll give you 4 ticks on each side of it, and then you can still get in the trade right there. Bang, bang. We need to see that tested, and then we get that 10% bounce and pullback, and then we're ready to roll with our long. On the other side of it, if in fact we get a test right up here within 4, I'll give you 4 ticks of that entry, of that resistance zone. We get a test up there, and then a pullback 10%. We're going to sell the market, and we're going to shoot for that middle of the road right here. Stop loss is going to be where? 1-to-1 ratio between your entry point and your 50%, which is going to be about 8, 8.25. 8.25 is going to be what? About 93, somewhere up in there. That's a pretty good late day scalp. I would be watching that. That's not a bad trade. I would just go ahead and take it. Don't take it in the last, I would say, 15 minutes of the trading day, though. So right before that 2 p.m., you don't want that. That can definitely get blown out of the water. But that's a pretty good look at a futures trade for a little bit later today. All right, let's check in on our sort of our pet rock. That's what I call these trades that don't seem to want to go. Okay, right here, 1 minute chart, Euro USD. You'd be looking for a pullback. You'd be looking for a crossover of that 9 over the 20. That video drops tomorrow. If you want to know more about the 920, be sure to tune into that video. All right, we got a couple other things we need to cover ahead of tomorrow's session, and then I'm going to let you go with one last look at what Bitcoin's doing. And I mean, it's just really been an incredible run in crypto. No two ways about it. All right, here we go. Financial Times. This is one big thing that nobody's talking about right now, and they should be. Russian campaign to support nationalist candidate raises alarms. This is all hearsay. The bottom line is Romania had their election canceled. Holy cow. What does that mean? It means that there's a lot of folks. I'm not going to get into the political end of it. What I'm going to say is this. The Russia-Ukraine situation is having very, very, very huge impacts to the entire region and the entire world. This is the story that's captivated the United States. Every time I turn around on X or social media or anything, somebody's talking about meeting the aliens. Where are the aliens? We want to meet the aliens. These aren't aliens. They're not aliens. What they are is some sort of spy program. Could be from the United States on its own people. Could be from a foreign entity. We don't know. Nobody's saying anything right now. But this stuff right here, we've always heard reports. We've always heard reports of unidentified flying objects. We've always UAEs. Not UAEs. I can't even remember it. I don't really care either. My point is this. We've always heard these reports my entire life. I've never seen this many videos fly in over a short period of time. UFOs have always been something that are sort of grainy, that some people have recorded on their phones or their camcorders. This is all public knowledge now. These things are out. They're out every day. We've seen them all over the place. The ones hounding New Jersey, these are military installations in New Jersey that are being hawked by what people think are drones. If I had to guess, I would say they were drones. I don't know, though. I really don't. Is it ET or extraterrestrials? Well, there's a lot of people that believe that that's exactly what's happening. And if you want to know more about Project Bluebeam, be sure to do some research on it. It actually was a game plan for the United States military and the United States intelligence agencies to actually bring the populace together by saying there's aliens coming. And I've read more stories on aliens in the last 3 days than I have probably in the last 10 years. This is real. So whatever's happening here is very real. We don't know what it is. Now, this goes back to, okay, now you're having elections canceled. What I'm saying is it all points to some sort of escalation of global geopolitical tensions. I think that if the United States doesn't know what these drones are, odds are it's a foreign power. And if it's a foreign power, this is a spying operation, a lot like the spy balloon hysteria we saw about 2 years ago. This is fascinating. I'm going to keep watching this. If you want to know more about Project Bluebeam, go ahead. I don't necessarily know if I believe it. I'm still gathering information, but we do know that these plans have been in the works for a long time, and we're seeing it rolled out in a big way. So what does all this mean to the markets? It's just uncertainty, guys. That's all it is. It's just uncertainty. Stocks are up. We get it. So is Bitcoin. Look at the money going into Bitcoin. So I take a look at stories like that, and I'd say, okay, global destabilization. What could that mean to Bitcoin? It's probably going to be a bullish market driver. Right now, most institutions are stockpiling Bitcoins. They believe that Bitcoin is going to be like gold. It's going to be a safe haven. If in fact it is a safe haven and it's behaving like one, we could definitely pull a gold Bitcoin correlation, that's for sure. If this is what we're going to see, then you're probably going to be looking at Bitcoin going a lot higher. Personally, I think it's a matter of time before we break out. I had all my technicals there. They don't really matter. There's only a couple things that really do matter to Bitcoin. 100,000 is one of them. Don't ever ignore key levels. Watch the key levels video on how to trade, YouTube. That right there is what happens when you have crazy action right around a key level. Boom, boom. And now we've been going sideways inside of that day, and now we're looking to rally a little bit. I think it's a matter of time before we break out and head higher. Okay, Shane, how do I trade it right now? I got the question yesterday. Shane, do I put my life savings into Bitcoin? No. Don't put your life savings into any one thing. Even if you have it in the bank, make sure that your bank's insured. You don't want to trade that either. You want to just buy pullbacks right now. And if you wait for your good rock solid entries, and we will get one, I promise, you'll see a big washout. It'll wash all the retail players out eventually. Retail's holding on right now, though. Looking pretty good, bidding up over 100,000. Boy, we'll be there. We'll be ready for it. We'll be ready for a big pullback down to like an 89.5, or maybe if we move higher, maybe like a 95 or 100 even. We'll be there. It will happen. We just have to be patient. So I'm not advising anybody to buy right now at 101. I probably wouldn't do that. I would wait, and we will get a great trade location. I promise you that. We really will. All right, everybody, I'm going to go ahead and sign off. That's I've gone way long today. Got talking about UFOs and every other thing. All right, we got one more question there. One more question. Let me see. Eldin. Let's see. Hassam, Eldin Onzi, good to see you. A lot of new names, a lot of new faces. Thanks for joining us today. What is the lowest time frame you recommend trading for the 8, 13, 21 EMAs? It's all about your time of day, Hassam. All about your time of day. The keys to success for these things, 3 keys. You got to know what to trade, when to trade, and what duration. All right? If you were going to trade a Forex pair, 24 hours a day, I don't think I would go any lower than a 4-hour chart. If I went lower than a 4-hour, it would be a 30-minute chart, and I would probably start doing that right around the London session on something like the Euro USD. If I was trading futures, say E-mini S&P 500, U.S. session, opening bell, ding, ding, 9:30 a.m. Eastern, 5-minute chart. I don't have any problem going with a 5-minute chart on that. I really don't. As long as we're trading when the most liquidity is in the market, that's going to give us a chance to get in on the volatility that liquidity and order flow creates. Now, what the real problem is when you try to trade those crossovers and everything goes flat. That's why I really don't recommend going towards really small time frames. So to answer your question, Hassam, if I was trading a Forex pair, I think a 4-hour chart, if you're going 24 hours a day, is going to be a pretty good place to begin. If you want to trade that London-New York overlap, you could probably go to a 30-minute chart on most of the majors and get away with it. As far as like WTI crude, 9 a.m. Eastern to 2:30 p.m. Eastern, that would be a 30-minute chart for me, maybe a 5-minute, but more than likely a 30. And then for U.S. equities, it would pretty much be the same during the U.S. trading day, 30-minute chart. That 8, 13, 21 is good. I like the 5, 8, 13 as well. Whichever one, just be consistent with what you do. And we'll talk a little bit about how to back test these things in the future. All right, Bobby Bob. Thank you, Shane. Looking forward to for No Donation Friday. Yeah, we've got a couple of live streams tomorrow. I'm going to be doing another 10-minute trading blitz. A lot of folks really like that. And that'll be in the trading room and then over at Forex Signals YouTube channel. So it won't be on this YouTube. But we will come back with a live Q&A for tomorrow, okay? So it's going to be the live stream, the second live stream tomorrow. Q&A. Send me your private questions. Private message me your questions ahead of time so I can prepare it. If, in fact, you want to show up and ask me questions live, ask them in the live chat on our YouTube channel. And remember, you can ask me anything you want. I got accused of being shady the other day on YouTube. They said, Shane, there's no need to be shady with your trade examples. And just understand, when I give you a trade example, I'm trying to illustrate exactly how it works. And a lot of times that's really hard to do with live trades. All right, I'm going to sign off for now. Bring your questions tomorrow. It should be fun. Have a fantastic session. Trade the action well, and we'll talk soon. See you.